Hello and welcome to the Big Idea Speakers Bureau video content series. Our first inaugural guest is Michael Hlinka. He is a business professor at George Brown University. He also designed and administers the highly successful Pass the CFA program at the University of Toronto School of Continuing Studies. He was a daily business commentator on CBC News' Metro Morning here in Toronto for 13 years. He's the author of the book Stalled, Jumpstarting the Canadian Economy. He's an active investor, a keynote speaker as well on topics such as the economy, market, sales, and more. Michael, good afternoon.
Good afternoon, Robert. How are you today?
I am well. How are you?
I'm terrific. Thank you.
Good. So what we're doing here with this video content series is we'd like to give people an idea about some of the things that you're going to talk about. I know that in the past, we have booked many events where you've given an economic snapshot. Since it is September 23rd, 2020, why don't you tell us a little bit about where you think the Canadian economy is going right about now?
Well, it's going to be a while before we recover. So recovery is going to be a long way off. I don't see anything that looks like in Canada in particular a V-shaped recovery. Okay. I think it'll be much more gradual. And I think what is going to be characterizing what is happening in both Canada and the United States over the next couple of years are basically massive fiscal deficits that we would have not dreamed possible even 1 year ago. That's where I think the impetus from the recovery is going to be coming. I think what people are going to be thinking about, political leaders are going to be thinking about, is the next election cycle, not how we're going to be digging ourselves out of this 5 or 10 years down the road.
Wow. And do you see the Bank of Canada, if asked again to monetize more Canadian debt, that we're going to create even bigger deficits?
Yes, absolutely. I think that the central banks are going to step forward, and essentially what we're doing at this point is printing money.
Ouch.
Now, but the question is going to be, though, what is inflation going to look like? What is going to be the nature of the inflation? And actually, I think I've got what I think is some pretty good news for most people, because there are some very strong anti-inflationary forces at work right now. There's going to be very, very soft labor markets, which is not as great if you're a worker. Agreed. That's not going to be fantastic. But I also think that there is going to be an impetus out of China to keep people working and to keep prices very, very low. So I don't see inflation as measured by CPI, anything that anybody is going to be worrying about significantly over the next several years. The inflation that we're going to see is going to be asset inflation. We've already seen that in the stock market over the past 6 months. I believe that continues. But I believe where the real sweet spot is going to be, and by the way, this is going to curry favor with the average American, average Canadian, is tremendous inflation in real estate prices in particular. That's where I think the inflation is going to be.
Wow. What?
In residential real estate.
In residential real estate.
Yes.
Do you see problems in the commercial real estate market?
Oh, huge problems. I just think that if you walk the streets of Toronto, the number of storefronts that are empty, and I don't think that's even started, by the way. I think that this is just the first shoe dropping. I think that the real vacancies are going to be 3 months, 6 months, a year down the road, because people right now are struggling. But I've been in a business for 15 years in a storefront. I am pulling out everything that I possibly can not to have that business go under, and I'm delaying it and delaying it and delaying it. But those moments of reckoning are going to be coming for a lot of businesses, unfortunately. And what it means is the landlords are going to have to start to cut rents. There's no ifs, ands, or buts to that.
Wow. What about jobs going forward? The job market, how do you suppose that might look in a year, 6 months, or the short term with 8.5 million people on CERB, others on EI, still millions of job losses? Where do you see jobs coming?
I think the job market is going to take a long, long time to recover. And I think that what we're going to be seeing are also, I don't know what the programs are going to be exactly looking like whether it's an extension of CERB or whether it's going to be extended unemployment benefits, but there is going to be a lot of money. And this is just sort of the deficit story. The government will keep paying people and keep paying people. So at least they'll have enough money to make rent. At least they'll have enough money to make food. Because I think particularly when you see what's happening in the United States right now, if you as a government are not seriously concerned about social unrest, then you're really living in a dream world, because that is a distinct possibility even in Canada.
That's a real risk. I was going to ask you also a little bit about the perceived, well, not perceived, but real. We just discussed jobs, but the disconnect between Wall Street, Bay Street, and Main Street, while the markets continue to go up, jobs slide, the economy's shattered. What's going on?
Well, unfortunately, what's happening now is as they're printing money, the money is finding itself. It's got to find somewhere to go. And because we haven't seen inflation, look, this consumer price index year over year in Canada, last numbers we have were for the end of July. Prices were up 0.1%. And this was even after the sort of the impact of all the CERB spending in, I guess it probably started in April, May, June, and July.
Yeah.
So clearly basics are not moving up in price. You know, there have been shortages of some products, in particular manufactured products, but we haven't seen significant inflation in the broad array of food products. And by the way, there's a logical reason for that. Before the government started spending money, nobody in Canada, I mean, for the most part, but virtually nobody was starving. Nobody was suffering from having a lack of food. So the extra money that people had, we're not going into basics like bread and milk because people are already affording that kind of stuff, even if you were a lower income Canadian. So there probably is, and there is going to be some kind of food inflation forever at the higher end. And we've seen some evidence of that. But for the basic foodstuffs, it's not going to move anywhere. Like who, because they got a CERB check, was drinking more milk in their house or buying more bread? It's just not the way that we act.
Stocking up on toilet paper, though.
Well, fair enough.
Another shortage code, they said, at paper towels now.
Yes.
So are you suggesting then maybe that we are looking at stagflation or deflationary economy because of just the reduction in the amount of discretionary spending?
Yeah, I think it's going to be much more like a stagnant economy rather than even stagflationary. I don't think that inflation is going to be the issue. I think, by the way, that even if inflation starts to kick up, interest rates will not be raised because nobody wants to bring this to a standstill. One of the great, this is particularly, by the way, true in the United States, but one of the great supports for the economy over the past several months has been the housing market, and nobody wants to derail that. Look, the Fed has all but said they're not going to raise interest rates until 2023. You know, that's 3 years into the future. That's a long, long time. We are looking at very low interest rates for an extended period of time. I think they've basically announced it, and we're going to be looking at significant deficits for an extended period of time. That's basically been announced as well.
Negative interest rates possible as well?
Possible, but I think unlikely. I think that would be less likely rather than more likely.
Okay. Is there anything else you want to tell people just a little bit about the economy, or any good news that you see in the future going forward? Because we'll end it on there because we're running out of time.
Yeah, I would say that the good news is that if you're right now, if you have a primary residence, I would hope and I would recommend that you do everything you can to keep that, because I would not be surprised that if the average house price, for example, in a city like Toronto, I wouldn't be surprised that the average house price would double over the next 10 years.
Double in 10 years.
It would not surprise me at all. And in fact, that might even be a conservative estimate.
Wow. Michael, this was very, very revealing. And it was great to talk to you again. So let's, like I said, we've run out of time, and I want to thank you for speaking with me, and hopefully we'll get to do it again sometime.
I would love to, Robert. Anytime. Take care.
Okay. Bye.